Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 10th of December 2022. We're publishing our gold and silver weekly update for the week ending the 9th of December. We've seen gold and silver hold firm this past week, but this coming week will be the most exciting for the remainder of the year. Why? Let's take a look. Let's look at precious metal prices first. Gold fell just $1 last week, falling from $1,798 to $1,797. Having hit a high of $1,810, an overture springs to mind, and a low of $1,766. A fall of just 0.04%. In sterling terms, gold finished the week at £1,466, that's up just £3. And in euros, it closed at €1,706, that's unchanged. Now, silver did better. Silver rose 32 cents, moving from 23.17 to 23.49. Remember, 23.50 is quite a key resistance area. Having hit a high of 23.70, so above that resistance, but a low of 22.05, a rise of 0.3%. In sterling terms, silver closed at £19.17, that's up 33 pence. And in euros, it closed at 22.33 euros, that's up 0.33 euros. The gold to silver ratio fell from 77.6 to 1 to 76.5 to 1. Now, the difference between gold's high and low for the week was $44, and the difference between silver's high and low was $1.65. A few months ago, the difference between silver's high and low sort of moved between $1 and $1.20. It's rising and has been rising, that difference, over the past few weeks. Now, we did predict last week we expected to see gold trade between $17.50 and $18.50, which it has done. And we expected silver to trade between $22.25 and $23.75, which it has also done. But it did move into our slightly lower end of the outlier range of $21.50 to $24.25, though it rapidly recovered. Now, we'll discuss the reasons for these movements after we've looked at how the other financials have fared. Bitcoin, for example, currently stands at $17,172. That's up $256. Equities were lower last week. The Dow Jones closed on Friday at 33,476. That's down 954 points on the week. The S&P 500 closed at 3,934. That's down 137 points on the week. And the Nasdaq Composite closed at 11,004, down 457 points on the week. So not a good week for equities. Good week as far as the consumer is concerned for oils. Brent crude closed at $76.10, that's down $9.47, and WTI crude closed at $71.02, that's down $8.96 on the week. The dollar index stands at 104.81, that's up 0.27 points on the week. So, before we look at why gold and silver rose, or rather gold dipped just $1 and silver rose slightly, and why the US dollar also rose, let's take a look at what data was announced this past week and what we can look forward to this coming week. Okay, looking at the data for last week, quite surprising on Monday, we saw the ISM Services Index for November announced at 56.5%. Why was that surprising? Because the previous month it was only 54.4, and there were expectations of it falling further to 53.7. This led really to the markets thinking demand has not only not fallen, but looks like it's increasing demand for services. As a result of that, that frightened quite a few analysts into believing interest rates, though we all know are going to go up next week, might go up a little bit higher than anticipated. Which is why, if we take a quick look at silver, we could see that Monday, Tuesday, the silver price fell, both in euros, in sterling, and in dollars. Though, and we'll explain shortly, it did pick up later. Previous month, we had a productivity revision which was similar to expectations. And then on Thursday, we had jobless claims coming in exactly as was expected or anticipated, but a rising continuing jobless claims figure. Thus suggesting, of course, that interest rates are cutting in and affecting potential employment prospects. And then on Friday we had the producer price index final demand at 0.3%, which is higher than expectations but similar to the previous month. Interestingly, though, the UMich consumer sentiment index, though it's the early report, is actually higher than anyone thought it would be. All that is fine and dandy, as they say, but it's next week that's the crucial week. Why? Well, on Monday we have the New York Fed 1-year and 5-year inflation expectations. On Tuesday, now we get into the real nitty-gritty of the important info, we have the consumer price index, core CPI year on year and core CPI year on year. Wednesday, the import price index, but all eyes will be on the Fed funds rate announcement. We've got the Fed funds rate currently at 3.75 to 4%. We've forecast for some considerable time, we envisage this to go up by 0.5%. That's 50 basis points. And of course we'll have Jerome Powell's news conference after the announcement. Now the rest of the data really, because it comes after the announcement, isn't likely to have too much of an impact, whereas if it became before the announcement it would. And we have retail sales, another core important piece of information. Retail sales for November, but we probably guess these because the Fed is likely to know what those figures are going to be when it makes its decision on Wednesday. And then on Friday, we have the flash S&P US Manufacturing and Services PMI. So a very, very important week for the dollar and equities and gold and silver prices. So clearly Wednesday is the most important day, though Tuesday will have a significant impact. Now this view is also shared by Gary Wagner, a chartist whom we respect and writes for FX Empire. And he's published the following this week. Quote, "Market technicians unanimously agree that the 200-day moving average is the line in the sand when it comes to technically determining if gold or any other stock or commodity is in a long-term bullish or bearish trend. While it is the longest time cycle typically used in moving averages, it's been the accepted go-to study to determine the current long-term trend of a market. On Monday, gold futures broke below its 200-day simple moving average after opening at 1810. Gold traded to an intraday high of 1823 before selling off sharply by first breaking below 1800 and finally settling on the first day of the week at 1781. Gold's current pricing puts it well above the simple 200-day moving average, which is currently fixed at 1799.60. Now, at the time he wrote this, gold was above $1,800, but we know it closed a little below that. Another key element, this is quoting him again, in gold pricing this week is that this week's high of 1822 creates a double top, as it matches the intra-week high that occurred during the week of August the 8th. The top that occurred during the week of August 8 and this week created a chart pattern that can best be labelled as a rounding bottom. Now, according to Investopedia, a rounding bottom is a chart pattern used in technical analysis and is identified by a series of price movements that graphically form the shape of a U. Rounding bottoms are found at the end of an extended downward trend and signifies a reversal in long-term price movements. Hurrah, I hear you shout. He didn't say that, I just said that. This pattern's time frame can vary from several weeks to several months and is deemed by many traders as a rare occurrence. In this case, it loosely fits the criteria to create this pattern because of the highs that occurred in the middle of the bottom. That's the bottom of the U. Gold futures prices would spend the rest of the week clawing its way back up. It would take until Friday to accomplish that task. Fundamental events will have the largest influence, this is Gary now, fundamental events will have the largest influence on determining the direction of gold next week. The key elements to look at will be the latest numbers on inflation vis-a-vis the CPI report that will be published on Tuesday. This will be followed by the most important economic event, the conclusion of the last FOMC meeting in 2022 on Wednesday, unquote. This is us now. We cannot disagree with Gary's conclusion. Technical analysis, in our view, is all well and good and is the basis for most traders' actions. But all said and done, what happens Tuesday and Wednesday is what will dictate gold prices moving in to 2023, and what is said by Fed Chair Jerome Powell. Now, silver plunged earlier in the week only to stage a strong recovery towards the end. 23.50 offers some resistance, which is why it's interesting that silver prices bounce back down to close below this level. We stated last week that we could see silver touching $25 this year, especially towards the end of the year, as liquidity in markets decline and price movements become more exaggerated due to smaller investment sums having disproportionate effects. Now, equally though, and we cannot rule this out, silver could fall back towards $22, if not $21, if the Fed appears more aggressive this coming week than anticipated. So we cannot overemphasize the importance of Wednesday. We're either going to see silver at $21 or we may see it trying to reach that $25 level. We also have the ECB, the European Central Bank, announcing its interest rate decision on Thursday, a day after the Fed. And the ECB has already given various indications that a half-point rise is the likely outcome, and another rate rise early in 2023. And again, that will have an impact potentially on gold and silver prices. Now, traditionally, precious metals have fared well towards the end of the year and into a new year. And so unless the central banks talk very tough this coming week, we could see some end-of-year strengthening for the reasons we've already highlighted. Though, as traders wind down their positions for the Christmas holidays, we will not personally get too carried away with moves in either direction until we are well into January and can see a new year trend developing in whichever direction that may go. And of course we have thoughts on that, and we will be announcing those over the Christmas period. So how do we see prices moving this coming week? Could be quite some variation, but broadly we still see gold trading between 1750 and 1850, with 1725 and 1875 as outliers, and same really as last week. But silver slightly different. We see that trading between 22.50 and potentially as high as 24, with 21.50 towards the downside if the Fed is more hawkish than anticipated, and 24.50 to the upside. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And finally, as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.